Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Welcome to July. It's finally July 1st. I honestly don't even know when the summer started. It's been really hot too, to add fire to the flame. Anyhow, we're going to be opening up in about an hour and 47 minutes to be exact with you, to be specific with you. And right now, the Nasdaq is down about 35, the S&P is down 12, and the Dow is down about 110. We saw major volatility yesterday. The market opened down about 300 points, went down about 500 points, and then rallied almost to break even, which is a very strong sign because this is twice already that the U.S. market is starting to pick up some of the slack from the downside pressure that we're seeing from global economy, which is very, 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 very positive. Now, just to remind you, today's Friday, and we're starting a 3-day holiday weekend, which means volume is going to be very, very low because there's a lot of traders that are out traveling right now. Monday's a holiday. This is one of the biggest holidays of the year and an official midsummer holiday. So we're going to have a lot of traveling. Don't expect a lot of directional bias and expect a lot of market cap to be all over the place. Moreover, we had earnings on Micron, which were slightly below expectations, slightly. So that may impact the semiconductor sector too. It'll be very interesting if this stock regains some momentum and rallies during the day, because the numbers were not all that bad. And if you look at the stock, you will also notice that the stock is really, really, really overdone right now. I mean, like really overdone to the downside. I mean, and the divergence that I'm seeing is really crazy. So I wouldn't be surprised to see this divergence reflect itself with a higher price instead of lower price, because I think the stock has priced in this current downside. But anyway, you want to watch the SMH today because chip stocks are going to be big in play. And by the way, before I get into my analysis, I want to remind you, I'm doing a class today at 1 p.m. with T-Buzz, with Tom Busby. It is going to be very cool, and I'm going to be giving you 3 hot stocks, or T-Buzz and I are going to be giving you 3 stocks. Now, before we get into the analysis, remember this week, we took profit on Monday on this strategy. We didn't hold this strategy till today. We held it for a few days. We made about, let's see here, we made about 31.82% by buying the Russell and selling it. The Russell gets a rotation the last week of June, so it tends to rally. And now we're talking about this trade right here, which we were supposed to buy on the 29th, which was the day before yesterday, and hold for 6 trading sessions. It has about 68% accuracy. I decided not to give this trade to my group because markets are real nimble right now, but I did like, and there's a lot of unforeseeability over the holidays, but I did like the fact that our investors made money on the Russell trade from the first cyclical or seasonal nature. Another major factor that you need to pay attention to is the fact that bond markets are and as I mentioned, I'm going to give you 3 more trades today with T-Buzz at 1 p.m. today, so don't go anywhere. And this turn of the month S&P is basically, again, we buy at the close on the 29th and we sell 6 days later, not 6 trading days later. So I guess the first chance on the 5th, when the market reopens on Tuesday, you would be getting out of the trade. Let's talk a little bit about global economy. As far as news, we had jobless claims, personal income. Both numbers were on the level. There wasn't anything squirrely about them. Today, we've got manufacturing index and construction spending. That'll be important. And again, you want to keep your eye on the bond market. And the bond market is starting to move higher and not lower. Notice the pressures moving from lower to choppiness. You will see this type of trading action in consumer stocks because they follow the bond market tremendously. For example, look at Crocs. Let me just give you a simple example so you could see how these two. So this is Crocs, down, choppy. And look at the bond market now. And you will see the same type of pattern with consumer stocks. The more bonds turn choppy sideways, the less pressure there will be for the stock market to go down, because when the bonds go sideways, long bonds, they're telling us that they're not seeing as an aggressive rate hike. Remember, they're inverse to interest rates. They're not seeing as much of a rate hike, and that puts less pressure on tech and consumer stocks. So we're now more of a sideways, and if we don't break lower, and if inflation peaked, there's evidence of inflation peaking, we will actually go higher. or stay within this range for quite some time. This will buy us some time because this puts less pressure on the market, giving tech consumer stocks time to regain some of that momentum. And hopefully I explained that well. So it's very important to keep your eye on the bond market, because the longer the long bond can go choppy and sideways, the less pressure there will be on the interest rate sensitive stocks in the term. Now let's talk a little bit about global economy while we're at it, right? So Japanese central banks rekindled worries about the world's third largest economy. Recent data suggests global growth is slowing down in countries that are grappling with renewed waves of COVID outbreaks. Wouldn't be good for us. Soaring prices and the war in Ukraine. The Bank of Japan Tankan survey, headline index for large manufacturing was 9, down from 14 in the previous quarter, and a second straight quarter of decline. Not very good at all. In a bit of positive news, a survey by Chinese magazine Cakeson found Chinese factory expanded in June and had its strongest rate in 13 months following an easing of antivirus restrictions that shut Shanghai and other industries. And folks, this is really important. This news is very, 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 very significant, because China is the second biggest economy. And if China can spur up growth, it can help global economy get out of this inflationary pressure, because the U.S. can't do it alone. Rising inflation is behind much of the slump for the broader market this year as businesses raise prices, squeezing consumers. A measure of inflation closely tracked by the Fed rose 6.3% in May from a year earlier, unchanged from its level in April. Commerce Department reported that consumer spending rose at a sluggish 0.2 rate from April. That's bad. Update following worrisome report earlier this week that consumer confidence has slipped to its lowest level in 16 months. That's bad. And I'm hoping that this is already priced into the market, because remember, some of this data is delayed. The government also reported the U.S. economy shrank 1.6%, which is quite a lot more than they expected. Weakened consumer spending was the key of the contraction. If consumers don't spend, it's bad. It's bad. OPEC decided to release some oil production, but at the level they're talking about, it's not going to do anything. And again, what's really interesting, we had this really nasty news, right? But the bond market did not go down. Now, if you're looking at individual sectors right now, which we need to do, you will see there's a big confusion right now. I think that's the best way I can explain it. Markets are really confused, and I'll explain why. Because on the cumulative basis, you've got energy, utilities, consumer staples, and healthcare leading. On the bottom, you've got communication and discretionary and technology. So the world looks right on a cumulatively basis, but on a singular basis, energy is all the way at the bottom. You've got a technology in the middle. So it's all over the place. And investors are not confident enough to know whether this is a sector rotation or if this is just a pullback. In my opinion, in my humble opinion, this is merely a pullback. I would find it very difficult for markets to regain, for tech stocks to start really regaining their exposure. And if you look at the major S&P, the big players in the S&P, you will see that most of it is not tech stock. Most of it is consumer discretionary stocks and, is healthcare and consumer staples. I don't know what's going on with bar charts. With StockFetcher. Let's see if we can get it going. But I was showing this to you yesterday, and you don't even have to go that far. While it's loading, let's just look at history heat map, industry heat map. So you could see right here, 1 month, auto, medical, a lot of medical, consumer staples and medical. Not so much technology, and energy is all the way in the bottom. So again, in the last month, but if you look at 3 months, you'll see that energy, oil refineries are up here. So it's really, really an interesting situation that we're in. But I don't think this is a major sector rotation. I think this is just a pullback. I think that defensive stocks are going to stay defensive and speculative stocks are going to stay speculative. I wanted to show you the CSI top stocks. About a month ago, it was all energies. Now it's consumer, staples, and medical and utilities. So things are broadening. But again, you got to keep your eye on the bond market and you got to keep your eye on volatility. The market broke lower yesterday, but volatility is not cooperating. That's telling me, and it's down this morning. It's a very positive sign. Also, I wanted to show you the put to call ratio, which is looking solid, and then I'll get to what to expect next week. Again, we're still here. We're still on the upper end. We're still on this side of the fence. We still haven't gone one time over bought since October of last year. So that rubber band is stretching out. We need the market to come down here. It's still oversold. So I'm expecting upside from the market. And if you look at momentum levels right now, you will see that we're still in the crapper in terms of the broad market, and that there's a lot more upside potential, but it looks like we may be congesting or kind of hunkering around this level for a little time. All in all, we're not up here, we're down here, we're a lot more closer to the bottom. So let me show you what to expect next week. Very, very important. And again, don't take today's trading action too seriously because it's a holiday and it's going to take a few days next week for the market to regain its rhythm. The S&P looks very, very kind of choppy, not listless. We can go down here and test the bottom, or this could be the bottom. I think we're going to go a little bit bottom or just stay around this area and consolidate. If you look at the Russell 2000, you will see that it's doing very much the same thing. So the question is going to be, are we going to break the slow or are we going to stay within the slow? The magic number here on the downside on the Russell is 163, on the upper side 178. Those are the levels. On the SPY, let me give you those levels, very important. On the SPY, the bottom level is 371, upper level is 390, 365. If we break either of those, we're going in one direction or the other. On the Dow, those levels are 303 or 30,300 and 32,000. So there's quite a bit of a range. Now I want to show you something else that's kind of interesting, I thought. Let me show you average true range. 10-day average true range. If you look at the ATR, let me just take this off here and reduce this time period, the display, to small or medium. You could see here, volatility is not, it looked like it peaked out right around here, and it looks like it wants to go lower. If volatility keeps declining and the market even hovers around here, that's a very positive sign. So usually when volatility declines, markets bottom out. So I'm hoping, it's still very, very high, but I'm hoping that this was the peak earlier in the year, and because volatility on a VIX level is not really going higher. So I'm hoping that this is near the bottom end of the range and stocks will go a little bit higher or start drifting sideways because the bond market is now drifting sideways as well. So more consolidation, more uncertainty, more choppiness, and more unforeseeability is what I'm expecting next week. I wish I had something better to tell you, but I don't. The big key right now will be whether chips will break lower here and really go down, because they're not look at volatility levels. Volatility levels are really, really low. See, when we were going down here, look at volatility, it spiked. But we're going down here now again, and volatility is going down. And we're near all-time lows. So I'm watching carefully if we're going to break this level substantially, or if we're just going to kind of hover around here and go sideways. If the bond market starts assimilating within its price what the bond market is already assimilating, then we are going to start moving choppy and sideways instead of moving down. And we got to move sideways before moving up. So this could be a turn that we're in right now. But expect next week, especially with the holidays, choppiness, less volatility, and markets driven by global events right now. And technicals, it looks like the chip stocks and QQQ stocks are starting to hit lows. So it's maybe a good time to start nibbling. Now, just a quick reminder, I'm going live at 1 p.m. Eastern today, and I know many of you are getting ready for the long 4th of July holiday weekend, but I strongly encourage you to join me and T-Buzz, Tom Busby, in the trade room before markets close today. We'll send you off right by giving you the names. That's right, we're going to send you off right by giving you the names of 3 stocks that are in motion right now. 3 hot stocks that are in motion. I'm posting the link below. Make sure to save it and enter the room before 1 p.m. today to reserve your seat. And we'll get ready for the great 4th of July holiday weekend together. Follow the link now. Join me today at 1 p.m. and get your hot stocks. I'll talk to you guys soon. Have a great day. Comments, love letters, everything. it's a challenging market, folks, and we've been doing okay. So hopefully next week we can do as well. We got a profit on EA this week, a short. We took profit on our Russell trade. So things are starting to move our way. Hope it helps. Talk to you guys later. Have a great, great, great holiday weekend. Bye.